Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you today?
I'm doing well. I think it's time for you and I to look at our very, very broken and a clouded crystal ball. We had a Fed raise rates 75 basis points last week. What do we see coming for the Fed, the economy, as we finish out this year? We're roughly halfway through, and then maybe a little sneak peek into next year. What do you see going on? Because it's wild out there.
It's crazy. It's crazy. So the Fed, they're just getting started. They're trying to regain some credibility. So, obviously they raise rates higher than some people expected. They are still in the camp of thinking that they can avoid a recession. We're already in a recession. We've been in one. The thing that's skewing the numbers is inflation. Prices are up. So obviously sales are going to be up. Revenues are going to be up.
Yeah, the top line will be up. Yeah, exactly.
Yeah. I mean, it's just, but we already had negative GDP because a recession technical definition is negative GDP for 2 quarters. So we were down a fraction. We'll be down a little fraction. Inflation is still going up. So they're just getting started. And a lot of people are already talking about and expecting the Fed to pivot in, July or Q4. And
yeah, Kathy Wood, July.
And talking about melt ups and, complete market reversals and all that. And what you need to understand is they're just getting started. They haven't even started yet. They're serious about this because, inflation and, where we're headed from that standpoint will do more damage ultimately than the Fed devaluing, markets and assets and popping the bubble, and they know that. And the narrative that you're hearing coming out of DC, like this weekend, the topic of the, all of the Sunday talk shows was recession. And you heard all the officials come out and say, well, we're not in a recession and we don't have to go into one, because they're trying to keep people from thinking that. Because if people get into the inflation and recession mindset, well, they pull back. And that's, spurs. But that's what the Fed wants. They want people to stop spending. They want to destroy demand, so that the balance comes back into check. So the narrative that's coming out of, the White House, and they want to have people to blame too, right? So they're going to point to all these different things. Like now they're blaming the oil companies for gas prices. They're blaming the war for inflation. They're not putting the blame where it squarely belongs, on the back of the trillions of dollars of, liquidity that's been pumped in the market and the stimulus and easy credit and low interest rates and all that stuff that's created this problem. So the Fed knows they're not in denial about that. And they know that they've got a lot of work ahead of them to get to it. So, fasten your seatbelts. We are just now getting started.
Yeah, I want to tackle that Fed flip-flop. I hear that ad nauseum, that the Fed's going to pivot, whether it's July or September or sometime this year. So I'll ask the question this way. I think there's no question that the Fed goes 75 in July. I think there's 4 meetings left in the year, including July. Might be 3. I think it's 4. Do you think there's any chance they don't raise rates at every meeting going forward? Do you think there's a pause anywhere? Do you think that's possible?
Only if inflation comes down significantly.
Insignificant, sub 5, sub 4? What's significant?
I think if you're in the 4s,
Okay.
I think, they might slow down at that point, but did you say, will they stop?
Yeah, I said, let's just assume there's 4 Fed meetings left. I might be wrong. I believe they raise rates at all 4 meetings. It might be a quarter, but all 4 meetings see the rate go up going forward. I think what you're saying is, hey, if inflation cracks for some unknown reason and ends up in the 4, I think what you're saying is we might have a pause at the last meeting.
Yeah, I mean, if they've got, signs that inflation's under control and, they've done their job, then that's when they'll stop. But that just isn't realistic. And, I don't see that happening, but it's possible, anything's possible. Yeah. And they can make numbers look however they can make them look. Right. So if they have a desire to do that, but I just don't see it as a possibility. I don't see it in the cards right now. I think, what is their target by the end of the year? Like 3.5%?
Yeah, now it's 3.5. They just did the dot plot. They're 3.25 to 3.5. They like to use that range, but 3.25, 3.5.
Yeah, so they're 200 basis points away, right?
Yeah, exactly. Yeah.
So they can't stop by the end of the year to hit that. And, and then the narrative is, well, something's going to crack, something's going to cause them to pivot. That's not going to change the Fed funds rate policy if something cracks. It might change something that they do from a liquidity standpoint or an asset purchase standpoint or something, but maybe. I don't think that's going to affect interest rate rises.
Yeah. And it was really funny to look at the Fed dot plot. They're actually forecasting rate cuts in 2024, which I just thought was hilarious. Which to me means they're gonna take this thing above neutral, whatever neutral is, call it 2.5, call it 3, whatever. They're gonna take it above so it becomes restrictive. And then they're envisioning like 18, 24 months out, they're gonna have to come back to neutral. I thought that was, I don't know. I thought it was pretty odd for them to put that in there.
Who knows what they're looking at, and and to their credit, we don't know where we're going to be in 6 months. We don't know what could pop between here and there in terms of credit markets, bond markets, equity markets. If we got a real serious event, markets have been on a steady, orderly decline because the Fed's been very careful about telegraphing in the markets. They don't want panic.
Yes.
And for everybody watching, we haven't seen panic selling capitulation yet. We haven't seen that. So we're not at a bottom. A lot of people are calling bottoms in crypto and stocks. We're not at a bottom yet. We haven't seen that panic sell, bottoming capitulation yet. And we may not see an event like that because of this, the way it's unwinding and unfolding. What we are seeing is, markets are trying to adjust to, what's a real valuation based on interest rates now moving forward. And I think we talked about it in the last video we did, what is a real PE? Where does that need to be? And, given inflation, given interest and all that, and, you go back into history, I mean, is it 10, is it 14, I mean, like right now, the market's saying about 14, right? A lot of the investment managers back there, but when rates are way up and things are different, it might be a 10. Right. I don't know, so that's what the market's trying to figure out right now.
Yeah. And for me, kind of the market, PEs or the what you're paying, the multiple has come in. I think, I don't remember, it was 24 or 26, like 6 months ago. Now it's 16 or 15 and a half. But really what hasn't cracked yet is earnings. I actually saw a report over the weekend that earnings are up. Earning expectations are up. And I'm like, what are they thinking? How can the S&P 500 earning expectations be up? I don't see that heading into the end of the year. Does that make sense to you?
Well, inflation's pretty hot out there. So that's driving, a lot of that, but it depends. Different sectors, are under pressure and some are earning better than others. But so far, we haven't seen a lot of earnings beats, in a couple of areas here and there. But, again, a lot of that can be manipulated, with what's going on and having to discount inventories to get them sold, Target, Walmart, that's stocked up. It's hard to believe. And with home builders, I mean, hard to believe they're going to be beating earnings, right? So
yeah. What do you think? We got Lennar and KB Homes. Lennar's tomorrow morning and KB Homes, I think, is Wednesday afternoon. Any thoughts on those two? Because they're really different segments. People don't know Lennar for me is kind of mid-market and KB Homes is starter homes. What do you think about those two? Just wild ass guess.
Yeah. So I think their future guidance is going to be dismal, right? I think that's the big picture. I think what they've seen is probably going to be okay. Because again, they're reporting previous quarters and sales have been up. I mean, this just started, a month ago. So they've closed a lot to get here. So they could be okay, up to this point, but future is where they're probably going to say, look, we're going to be in trouble.
Yeah, I expect them to talk about cancellation rates being higher than expected. I expect them to talk about deliveries slowing down. I expect them to manage cash flow, right? One of the things I think builders are much better at now is cash flow management. That's what really crushed them last time. They got too forward over their skis as the market changed. I think they're going to be managing those numbers. And yeah, you're right. I think last quarter, right, revenue and earnings will probably be okay, but forward guide's they've got to just take a hatchet to it and just lower expectations, I think.
Yeah. So what do you think tomorrow? Market's up or down?
The stock market?
Yeah, we're coming off a 3-day weekend. Markets are closed today. Futures open tonight. So
yeah, so I think we'll open up, but in the day down.
Yeah. I don't know. And I don't think the home builders, I think they've been tailing, off leading into this because I think everybody expects, bad news.
Their PEs are 4 now. They're 4. It's crazy.
So that's the thing. What's a fair PE? And I think historically, based on historical averages, I think it's about 12 to 14.
Correct.
Is what I've been hearing, so where does that get to? And again, it depends on different companies, different sectors, but I think we might see a little bounce day tomorrow, just because we had such a big down day Friday. The last time the Fed raised rates, we had a bounce the day they did, and then it was down for 5 days after that. So, we had that bounce, on just like last week, we had a little bounce and it was down Thursday, Friday. When did they raise the rates? Wednesday
at 2.
Yeah. So I think we had a bounce that day and then it was down Thursday and Friday. So we'll see, if tomorrow continues the downward or, crypto's had a little rally, so we might see a little rally in stocks tomorrow. And then I think we're going to continue that downslide.
Yeah, that's exactly. Again, crypto's up again this morning. They kind of Bitcoin right bottomed at 17 something. It's up 20. It's up to 2,800. Again, rough numbers. So that's why I do think the market opens up, but I think reality sets in and ends the day down. I don't know. I think the S&P 500 sees 3,200 before it sees 4,200. It's kind of what I'm
Yeah. There's some deleveraging still to be done there, repricing. And I mean, you have to fully expect everything to get back to pre-pandemic levels, because that was where it was before the trillions of dollars. And then you got to be thinking, well, where should it have been before that? Because we've been on this QE trail, ever since.
It has to go. It has to overcorrect below it. It's just how that's how you have a reset, is that it's got to go below it. You got to rebuild a base and you grow from there. So, Greg, where can people find you?
Yep. GregDickerson.com. That's where all my info is. Go check it out.
Thanks, buddy. I appreciate you.